Hi there and welcome to the first Abu Dhabi Bank Global Investment Outlook. This is the quarterly update and I'm thrilled to be joined by Chris Langner, who's the Head of Investment Strategy for Private Banking at First Abu Dhabi Bank. Chris, thanks for joining me. Good to see you again.
Thank you very much, James. It's good to see you again.
So Chris, let's get stuck in. The market, it's really been rocked by the expectation of rising rates. What does that mean for the asset classes that you cover? And in all fairness, when will the bloodletting stop?
Yeah, it's been a tough year for anybody. In fact, the 60-40 portfolio, the traditional safe portfolio that puts 60% in fixed income, 40% in equities, is down probably 16-17% this year, depending on how you structure it. I would say that there is a potential for a little bit more bloodletting, as you put it, in the equities market. Perhaps the fixed income market may be closer to a bottom, at least in a total return perspective, because you're getting such high yields for high quality bonds now that you would have to have very significant drops in prices, particularly for the high quality bonds, before you start losing money in terms of the total return. Just to give you an example, the highly liquid corporate bonds, there are a couple of indices that follow them, they are now yielding close to 5%. This is the highest they have been since 2008, 2009. So you would have to see a 5% drop in the underlying to start losing money again. So on a total return perspective, it looks like bonds may be closer to the bottom, and particularly the high quality space may be an interesting area to look at.
Chris, let's speak about the US dollar. So the US dollar has strengthened this year. That sometimes or normally drags gold prices, emerging market assets. What's your thoughts for those asset classes for the rest of this year, considering the next 6 months?
Gold is an interesting one because if you look over history, it usually has an inverse correlation to the US dollar, naturally, because it is denominated in US dollars. But this year so far, the dollar has strengthened close to 10% against a basket of currencies, whereas gold prices have only dropped by about 0.7%. That indicates there is a strong underpinning for gold, there is strong demand for gold. And the question now becomes, what happens once the dollar peaks and starts dropping? We don't know yet whether the dollar is going to peak in the short term. It may be closer to a peak than it is to a bottom, naturally. And that suggests that perhaps gold could see a leg up down the road. It's not going to be in the next month or so, but again, there is strong demand there. For emerging markets, it's a similar story, but there's a little bit of a division in it within emerging markets. Some emerging markets are already benefiting from high commodity prices, the likes of Brazil, Indonesia, South Africa, but because they're facing very high inflation, their central banks are increasing interest rates. So some of the asset classes within those emerging markets are suffering, like equities, because when rates rise, it's not good for equities in emerging markets. And when the dollar rises, a lot of the companies in emerging markets that borrow externally have to pay more in their local currency to pay back the debt. So that also undermines a little bit the bond story for emerging markets. But generally speaking, once there is a change in expectations for rates and the dollar starts to peak, and again, we may be closer to that, emerging markets could do very well because, again, commodity prices are high. They are going to remain high for the foreseeable future. That's good for emerging markets in general. There are some exceptions. If the dollar peaks, that's also good. A lot of the emerging markets have already increased rates very significantly. So some local currency markets are looking very attractive now, the likes of Brazil. Again. So it may not be the time right now, but investors should start getting ready to jump into this space.
Okay, interesting. At the last Global Investment Outlook for Q1, we were in the Museum of the Future, and we touched base on China. We spoke about China prosperity, but not prosperity for this reason. It's more about China as a whole, the growth, the story so far. What's your thoughts?
So this is another reason why people should start looking at emerging markets, because a lot of the emerging markets now are more driven by China than they are by the United States, for instance. So even if the US is potentially going into a recession within the next year or so, China is coming out of one. So the US is pulling back fiscal stimulus, they're pulling back monetary stimulus, and on the other side of the equation you have China, which is adding fiscal stimulus and adding monetary stimulus. You have already started to see this in the markets. The Chinese onshore market since the beginning of April has rallied close to 18%. Meanwhile, the S&P 500 is down close to 20% this year. So it's been good to stay in China, but more importantly, it's a good time to potentially jump into China. And there's going to be a further effect across emerging markets too. That again is not immediate because there's a time lag and some of the emerging markets are still going through the, let's call it restructuring of their economies after COVID, but this space is getting increasingly interesting.
Okay, interesting. Something which is also extremely interesting is the fact that you're studying for your PhD. I believe you're 2 years in so far. But more importantly, you're studying for ESG, green bonds, which is a very hot topic globally, but especially in this region. Do you still see this trajectory of sustainability, ESG, green bonds, very strong within emerging markets and also the GCC?
Absolutely. In fact, I've often said this, it can be a little bit controversial, but it's very true. The GCC has much more history and ethical investing, and green investing, ESG investing, is just one side of ethical investing than most places in the world because of Islamic investing. So a lot of the tenets of ESG, remember ESG is environmental, social, and governance factors. So governance factors are always taken into account in Islamic investing because investors shouldn't be investing in highly leveraged companies or companies that are potentially defrauding their investors. So these things are already part of the psyche here, and what we're adding is a little bit more awareness about the environment, which again, depending on how you look at it, is already part of the Islamic tenets anyway. So I think this is definitely going to continue. Now, what I'm studying is a little bit more complicated. It's about the very loose definition of green and how that can potentially allow a lot of companies to do what we call greenwashing. Because green is a definition, is a self-labeled definition. A lot of companies will go out and do a bond and say it's a green bond, but there is no checks on whether the money was invested for green purposes. There is the potential for greenwashing. I'm still studying whether that happens or not. So
okay, no, they're really interesting actually. And if you don't mind, just one more question. In lots of talks outside of the world, stagflation risk, recession risk, but within the GCC, not maybe the emerging markets, would you say it's a sweet spot at the moment?
100%. And in fact, I think we said that in our last Outlook interview. The GCC couldn't be better. First of all, they've done a lot of fiscal restructuring over the past 6-7 years because of low oil prices. And now that they have put the fiscal house in order, they're getting high oil prices. So it's beautiful because they've invested in non-oil production. A lot of the non-oil GDP has grown a lot recently. They have a better tax system, so there's VAT in Saudi, VAT here. There are other sources of revenue, and at the same time, now you have high oil prices. So they have the ability to invest, to add fiscal stimulus when the world is pulling fiscal stimulus out, but without putting the house out of order.
Yeah. Chris, always super insightful, always super informative. Appreciate your time and look forward to seeing you on the next Global Investment Outlook.
Thank you.
Thank you.